So today was a day that was very interesting. It was all over the place, we'll say. Anyways, point is, this is probably going to end up being about 475, I'll say, in profits at the end of the day after commissions because of how much I traded. That's still really good considering what had happened throughout the day. So, on the watch list today, we had there was a few names moving. I had broken it up a little bit today, a little bit differently on my watch list, and I'll get into that at some point between catalyst and non-catalyst, but charts that I still like. Anyways, so I was watching SFIX at the beginning of the day at the open, and so I was watching this pre-market pattern here, and so we can see this pre-market pattern. It gapped up on some news, and so it's come up, pushed up, and it held support, made a higher low, and then pushed up into the opening bell. We're here at the opening bell, right? And it breaks the pre-market highs and explodes. So I wanted to get filled here, right? I wanted to get filled at just over 51. Goes from 51 to 55 instantly on the first 5-minute candle there in the opening range. So at 9:35, didn't get filled, unfortunately. So I was watching it for a trade a little bit later on, and so it was consolidating here, consolidating, held the VWAP above the VWAP. So I took it here as it broke out above 53. Now, the academy that I'm with, I have some mentors that I follow as well. They've kind of helped me on my journey. Anyways, so the mentor that I was listening to the first time in a long time that I was listening to him live trading. Usually I don't do that because I feel more comfortable without the distraction. Anyways, today I was like, you know what, I'm gonna listen to him. He's been doing really, really well, and I'm not blaming this person for the trade. It was my own decision, but he had taken this trade as well, and multiple other people that I know that are good traders took this trade as well. And so we were seeing a similar thing, and we all got caught. I know people that hit their max loss today. I know people that were down quite a bit on this one trade, and it caught a lot of people, and it caught me as well. So it came up and broke out here, like you said. You see this, pop up. It consolidated sideways, held the VWAP, got up above, and I broke over 53. I took it for a long, and then boom, just instantly dropped down 3 points, 4 points, and I got stopped out, and it continued down, here. So I took I think it was about a $700 loss on that, and I had taken another trade prior to that. It was on QS. So this stock was great today, but just in the opening bell, I got caught a bit, and that was right here. So again, I was watching a pre-market. It broke up. I didn't take any profit here because I really liked this chart and I liked how it looked. And this is a recent IPO back in September, and it's really started pushing. It's got a lot of momentum. It's been in the news. So I thought, you know what, this has been killing it. I'm not going to sell this and take early profits. I'm going to let this go a little bit. And then boom, it just dropped right down on the opening range. So I got stopped there. So I had a small loss there before I took the SFIX trade, and that was about 350, I think. So anyways, between those two trades, after this trade and the SFIX, I was down $1,100 on the day. That's the most I've been down in this small account. That's most I've been down in a long time, off two trades right at the beginning of the day. So it's obviously not something that when you want to have happen, but that's part of the volatility of trading at the opening bell. And I've generally reduced the amount that I do that, but these were two stocks that I felt like had good potential, good pre-market patterns, and both of them, ended up causing me to take a loss. You even see here, QS, it came back down, held, popped right back up, and went from, down here at the bottom of the range, 50 up to 57, and that's by 10:10. So we're here 9:45 at 10:10, within 25 minutes, made that move, right? So this was a volatile stock, and I got caught on the wrong side of it. You get caught on the right side of it, you make some good money. And actually, I ended up taking this for a swing because of how much I liked it later in the day. So I took it at 53. I got in long at 53, which was here, we'll say. Right, I got in long because I liked this coming up as it held base sideways and started pushing up. And I sold it after hours. You can see how far this ran, all the way up to $70 from here, 450 earlier in the day. And from my entry at 53, I took a swing and I'm still holding some of it. So, my swing trade is different from my day trading account. My swing trades are, something that I'll get into at a later point, but, and it's a separate account than this one. But anyways, the point was like, this is, something I felt like had a lot of potential and a lot of room to move. And it did. It just, hit me in the beginning. And so I was down, like I said, quite a bit at the beginning of the day. And then that led me to having to be disciplined and, take the right trades, but be managing my risk the rest of the day, because I couldn't get in a point where, I was going to, be taking on more of a loss. So, one of the reasons why I had more shares traded was I was trading a name called PLUG and plug here. And it would just ran pretty much all day. Look at that, like straight up. Great chart there. Nice move. And so I was just scalping this essentially all the way, not all the way up, but later on in the day, I think the first entry might have been here for me. But I was scalping it rather than just holding it all the way through, because I was worried that a potentially, a drop could take away some of the profits that I was trying to recover. I was just scalping maybe $200 here, $200 there, $200 there, because I'm trying to bring down my loss, right? That's the biggest portion. And then at the end of the day, between QS, I took a trade on, and plug, for the most part, that got me back into the green. So I had to, trade throughout the day to do that. And unfortunately, when you get yourself in the hole early on, that's sometimes, where all your energy needs to go. Is just kind of, taking it trade by trade rather than trying to get it all back in one trade. And that's, the important part. And, at one point I had thought, I'm down $1,100 now. So if I can somehow get this back to break even on the day, then I'll be happy with that. And at the end of it, ended up being a positive green day and the best day so far this week. So I guess yesterday was Monday, but best day since, Friday I had the red day, Monday was not the greatest day, and then Tuesday, this is the best day. So, it shows you that, there are going to be opportunities, and maybe I should have just waited for one of those opportunities later in the day. And I wouldn't have been in that hole, and it would have been a really, really profitable day. But, hindsight is 2020. So, it, just shows you though that how, again, we talk about it every single time we do this review, how you have to manage your risk well, because if you don't, then you can have one of these situations pop up very quickly. So I'm really, happy about the way the day turned out. It was very frustrating, and I talk about every day that there are some frustrations that occur, but it's how you manage that. And I could have just piled into a trade, or I could have averaged down, right, on some of these trades. Maybe it would have worked out if I had to average down. But if I had to average down on SFIX, right? So if I had been long here at so where were we? So if I had been long here, right? We'll say I was long at 53, right? And then if I had bought more at 52, and then I bought more at 50, and then I bought more at 49.50, and then I bought more at 48.50. Like I'm going to be holding a huge position, right? And I'm going to be down a lot of money at that point, because we're talking, 5 points that it's dropped. And if you have, if I had even 300 shares, right, that's $1,500, right? So, depending on how much you're holding, but if you're adding to your position, so I had 200 shares, right? So, if I had started with 200 and then added, say I have a bigger account, or, I'm maxing out my account, I added 200 shares and then another 200 shares, right? And this is why you don't want to get into these big bad habits, especially when you're going to start trading a bigger account. All of a sudden you're having 600 shares and you're down 5 points, right? You're down $3,000. So, that can ruin your account. So these are habits you need to avoid. Um, like I said, averaging down, or then taking, the next trade if I didn't manage it, and just try to focus on, getting the next green trade, then that could have led to me taking another bad trade and making my losses worse. So, you know, there were two bad trades to open the day. That's okay. We, like I said, I got it back to break even, and then I actually took another trade, and it went back down. I would think it was down another 400, and then at that point I'm like, okay, you know what? Let's take a break. I had some breakfast, and or I had some lunch, sorry, and then I regrouped, and I said, okay, let's just wait for the next setup that we feel comfortable with, and then went from there. And then plug started moving, QS started moving. There was opportunities that came about. So the key thing that we're talking about here is patience. I did talk about I wanted to be more patient, and then I was throughout the day. I was patient in waiting for my opportunities. I didn't try to get it all back in one move. Maybe if I had done that, I could have had more profit. But at this point, for me, I was like, yeah, I got some profit. I got to lock it in, get some profit, lock it in, and then at the end of the day, it was a positive result, and that's what we're striving for. So come back to it tomorrow. We'll look to just make it a little more cleaner day. Happy with the result, but want to avoid getting into that situation again for a while.